First of all, thanks for joining. This is our second one this year, and the next one I think you're going to see, well, hopefully you're going to see live, or at least several of you, because we're doing our event. Before Adam will start, I would like to introduce Kavita. Kavita will replace Frank because he couldn't make it today, but she will do a few comments on the things we're doing and the things we're working on as a GTDC. So Kavita, can I hand over to you? And then
Yes, I'm ready. Welcome everyone. Thank you so much. As Peter said, Frank is traveling today, unfortunately, was unable to participate. Just wanted to update you on a few key things that are underway. And since our last meeting, we launched a podcast series, Beyond Distribution with GTDC. Our first episode is out with Vision Ventures with Dave O'Callaghan, which I believe many of you know, really talking about emerging vendors and the role that the distributors play on onboarding and enabling emerging vendors, and on the programs and the advantages of the orchestration that distribution provides. We release those, we're going to be releasing them every 3 weeks. The next one will come out May 4th, and that is going to be with Michael White of Quadmark, talking about the importance of training and the importance of understanding distribution metrics and financial metrics, and understanding how to best leverage programs and build programs around the partnerships depending on the scale and size. And then on May 25th, we have one with IDC, who is our new North America database partner. And we're going to also continue those every 3 weeks. We'll keep you guys posted. The podcasts are available via Spotify, via Apple Podcasts, and we are launching SoundCloud in the next few days in time for the May 4th live episode to come out. So we encourage everyone to check it out. Feel free to subscribe, help us bump those numbers a little bit. We'd appreciate it. The podcasts are only about 25 to 30 minutes, so very easy listen as you commute or you have some time to pay attention to. We also have them on our website, and that you can actually watch the video of the interviews if you're interested. We are launching our next paper, Sustainability and the Channel, and how distribution is empowering green initiatives on behalf of the vendors, alongside with the vendors. And that paper will come out next Thursday. You'll probably see a press release around that as well. And then last but not least, we do have our upcoming June meeting. We have crossed our fingers and are doing it a live meeting, but due to the restrictions of the property, we are keeping it extremely small this year around, with hopes of going back to our normal size next year. So it is a limited attendance event. And for any questions around that, feel free to reach out to us. And that for my session, that's it. Does anybody have any questions about that? Feel free to let me know, or if you have any questions right now that you'd like to address, I'm here to answer them, or Peter.
Well, Adam, over to you.
Okay, thank you, Peter. Well, it's great to be here with you to give you the update, and also there will be a bit of participation and some questions that we've got towards the end. So let me just start off by giving you the opening slide, which is the one that I've shown to you in the past. It's a 13-week rolling average of activity in the channel, and it's based on 2021 revenues. We have our big peaks in the Q4, but we've just gone through our Q1 peak. So I just thought I would show you where we were on the Q1 peak. So that the red lines mark where the Q1 peak is. And this is the main countries. What you can see is that, in fact, last year, a country like Italy, which is the green line, was a little bit higher in terms of activity than this year. So you can see that it's a bit lower on this year's scale. And what you can also see is that the countries are much more bunched together in terms of their activity. Each country is measured against itself, so it means that it's closer, all of them, to their average of 2021 activity, without the outliers which you had last year, such as Poland, which was below its average, so which was lower. So there you are. In the end, it was a good quarter, and I'm going to take you through more traditional measures of the quarterly numbers when we look at the quarter-on-quarter performance coming up now. So we did a forecast back in January for the next 4 quarters, and we forecast that it was going to be minus 2.4% overall in the channel, which is without telecoms. And in the end, we came in at minus 1.5% without telecoms. The reason why we took telecoms out of it is because it's a very large number in the channel. It impacts the forecast very much. And there's some activity of moving, particularly Apple, out of using the channel, and it had big impact on the numbers. So it looks as though performance is actually worsening, whereas in fact, it's a choice of a company like Apple not to use the channel. So we took it out. So we were within 0.9% of what we actually forecast. And that was very much helped by the channel, by people who came along to our forecasting sessions and helped us to put together that forecast. So I'm going to take you through that in more detail. If you include telecoms, we were much more pessimistic because in fact, telecoms did a lot better than we thought it was going to do. So in fact, there was a bigger gap there, and that's entirely down to the telecoms business. If you look at the last 3 quarters, it's always useful just to keep life in perspective. When you see a minus number is not bad news in the channel at the moment. A minus number means there is a small correction compared to 2 very large quarters. So we looked at plus 5% in 2020. That was the famous pandemic quarter. Then it was up to 12%. It was the largest growing quarter of the pandemic period was Q1 2021. And so the minus 1.7 against that is really a very, very successful performance. When we look at it by what we call key sector, again, the same code, the mint green is the actual and the purple is the forecast. And you can see that in those critical ones, we were pretty close. So mobile computing, which represents 25% of the channel, that's notebooks and tablets, we were very close at minus 12%. In fact, that is a composition of minus 8% on notebooks, but minus 29% on tablets. So tablets had a huge decrease compared to the prior year. You can see that software is doing really well with 9% growth against our 10% forecast. Telecoms, you can see we were a bit out of whack there. Printing, we was pretty much spot on. Services has not been doing very well in the last few quarters and continues in minus territory. The big surprise was monitors and LFD, which continued to perform incredibly well against prior year, despite very strong performances in the previous years. And computing components was a bit of a surprise. The processor performance down to supply chain was poor in Q1 compared to what we expected. When you look at computer accessories, which is webcams, and AV systems, which is mainly headsets, we were fully expecting it to be in negative territory because of the very high Q1 2021. If you compare that against 2020, it's still huge, and against 2019. So we're still looking at big growth there. So overall, positive. Now, let's do a little recce of how well this group did back in January. So we just took 5 different sectors and we said which industry sector will grow the most in 2022. And so I've got the actual growth there. So mobile computing minus 12%, warranties and service minus 3%. So basically, we got those 2 pretty much spot on. When you look at software, and networking, which were the two that grew the most, you can see that most people voted for software and networking. So I think we can give a tick on that one there. But it's the displays one, which I think we all got wrong, because no one voted for displays as the highest growth, and it ended up by being the highest growth. So that's quite interesting. So that's just a little comparison to what everyone thought at the time. Now, let's have a look on a country basis. If you look at it on a country basis, Germany was down 5%. Germany's had a pretty tough time. It's looking a bit better now, but there is still some issues there in terms, there's been some big supply chain issues in Germany, and also confidence issues as a result of the election at the end of last year. And it's been very impacted by the Russian crisis as well. But we knew about that, and we were discussing it with the German channel, who said that they felt that -5 was about where it was going to come to. I was a bit more optimistic, but in fact, I was listening to what people said, and they said, no, actually, it's going to be a bit worse than we thought. And they were right, in fact. UK has done really well, much better than we expected. You know, UK had a huge challenge in terms of mobile computing, where 2021 is a really, really strong performance. And they did really, really well on it. So we thought they'd be at -20% on mobile computing, but they came in at -16%. And they did very well on other areas such as displays. And so they had a really, really good period, in fact, in Q1. Italy started off the quarter really badly with a terrible January, very low footfall in retail. And so that's really what has dragged down the Italian performance compared to what we thought. French was pretty close to where we said, and Spain as well. Poland has done extraordinarily well in continuing to grow on the basis of previous growth as well. And the rest of Europe did better than we thought. Again, it was very much driven by the mobile computing. So that's the other 15 countries in our panel that we have not analysed that individually. So that's just an idea of country performance. The story of Q1 is really a story of reduction of units. And you can see I've picked the main hardware categories here. And you can see that the only category that was going up in terms of units in this period was the large format displays. All other hardware categories, and these are the main ones, were actually reducing in that period. But then when you look at the ASPs, you see that the -17% of units is compensated by a +12% on the ASPs. And from there, you can then see what actually happens is that the revenues are in fact -7%. So really, that's the story of Q1, is that the increase in prices really saved the overall revenues. Just a quick spotlight on the rest of the world. It's just to show you that Argentina, which is one of the countries that we track, it was one of the hugest performances in 2021, has continued very strongly. South Africa, I don't know if Anton is here. I can see Anton is here. So hello, Anton. I wanted to make sure that I put in this for you to make sure that South Africa was in here. In fact, it grew very strongly last year and was just a little tad negative in Q1. And Turkey had a very bad start to the year, January and February, but in fact recovered in March. And just for the sake of Anton, you can see here what's gone on the channels is that 2021 was a story about retail channel with huge growth on the retail channel, 184%. And this year it is the SMR channel, which is really leading the growth in South Africa. And these categories here, which represent 75% of what goes through the channel in South Africa, you can see the performance. Again, you can see displays have done really, really well. And software is the second largest category in South Africa, which is one of the interesting areas. And I know that the distributors are working very hard on developing the software business in South Africa. A little word about Russia. We've been following the Russian activity, and the Russian business is really down to nearly 50% of what it would normally be. It's going down week by week. Last week it was at 70 on the index. This week it's at 60. The volume business has really gone down. The value is starting to, some of the value categories have been very resilient. And things like servers and storage have been pretty resilient. But what is happening is that the stock is going to run out very soon. So we do expect these numbers to continue going down, and it will be mainly sourced out of China or sourced out of themselves that will keep the channel going in Russia. As far as where we are overall, we've developed a new 52-week rolling average to show where the business is. And you can see that we reached one inflection point back in week 45, which is when the value business overtook the volume. And you can see another inflection point. I believe that 0% in week 15 should be an inflection point, because we are expecting the year-on-year numbers to start to grow positively in the rest of the year. How positively is interesting. We're going through a process now of seeing what the channel think. We've just had 5 forecasting sessions, and we hope to feed that back to you. And we'll be interested to know what you think when we do the survey at the end of this session. In terms of top categories, here's a bubble chart which measures along the horizontal axis the growth in terms of year-on-year revenue. On the vertical axis, it represents growth or decline in market share of the distribution market. And the size of the bubble is, in fact, the size of revenues of that particular category. So these are the top categories. This is at a lower level than the industry sector, which I showed you. So you can see notebooks there down 8%, and of course the size of notebooks, and the -4% of smartphones. But here you see the monitors up 11% and taking share of distribution. And just worth pointing out a few others, such as televisions. Televisions had a really very strong performance, particularly in Italy, where there's a technical changeover taking place at the moment, which led to a big increase in sales in Italy. Notebook workstations as well, and docking stations doing extremely well. Interesting to see that smartwatches are in the top volume products as well now. They're getting on to being nearly 200 million in that period, which shows a pretty substantial size that they represent. If we look at the value top categories, this is hardware only. I'll show software in a minute. You can see the large format displays leading the way there. The wireless access points, part of the growth in wireless networking, which has been doing very well in this period. The others closer to stability. The servers is only part of the server configuration, so that growth in revenues there is a little bit deceptive because the overall category didn't do quite so well. You can see network switches doing very well, maybe not gaining in share of the overall market because of the huge growth in large format displays. And you can see internal hard disk drives down. And then this is the software and services, which is really interesting to see. You can see how well some of those software categories have been doing. This makes up the overall 9% growth in software year on year. This is breaking it out into more detail. You can see security software growing very, very strongly, and an important part of it. You see warranties growing. We did an analysis on that recently, and one of the factors influencing the UK has been the move from 1 to 5 year warranties. And the other thing which we reckon as well is that the UK is very good at explaining to people what is a warranty involves because of the commercial law, and so that people trust and buy more warranties in the UK. So that was an analysis which we did recently. And this shows you just overall how the software and services are doing. A little word about the SMR channel. So the SMR channel was the big performer of 2021. It's where everyone is targeting. This is the growth in 2021, the light blue. What you can see is that it's continued to grow at 4% in 2022. So that's overall, we remember going back to it, it was a minus 1.7% growth overall in the channel, but smaller, medium resellers overall taking share. And if you look at it on the value business, you'll see that they took 1% share last year. They grew by 1%, sorry. But this year they grew by 13%. And when you break that down as to what the small and medium resellers are selling and where they're gaining share compared to corporate resellers, it's in software and licenses, it's in networking, it's in displays, it's in servers as well. So in all different areas, SMR have been performing very, very well in our channel data. So this is obviously two-tier distribution. And what did we predict? I asked you that question back in January, and you very much responded. So actual growth 4%, e-tail business 4%. So I think those two there, we can give a tick on that one there. On corporate reseller, which is at minus 1%, kind of semi-tick there. And e-tail retail chain at minus 7%, I think definitely a tick there. But it's e-tail consumer, which is the one that's lost out, in fact. And so some people thought it would be the one that would grow the most. In fact, it's the one that's grown the least. And it looks like there's a kind of rebalancing of things back towards SMR and back to the retail chain as well. So with that, I hope that was interesting kind of introduction to what is really interesting, which is where are we all going? And so we're going to ask you where you think we're going. And I think it's incredibly helpful. I'm going to show you, I mean, you've been pretty much right in your predictions in this group before. And so we're just going to ask you this first question. So if you go on to the slido.com, putting in the hashtag 184475, that's the code, or you can use your OCR to read it on screen. What is the likely overall growth of the distribution market in 2022? Okay, so you've seen minus 1.7% in the first quarter. I'd love to see a choice between the greater than 5 and the 3 to 5%. At the moment, it's okay. Let's call it greater than 5%. Okay, that's good. So let me just move on. We said you voted 3 to 4% back in January. So I'm going to, 3 people have very kindly volunteered just to give an input on this. So Dominic Mayer from Tech Data, Wayne Grattan from Nuvias, and Frank Salmon from CMS. So I wonder if we could just spotlight them and ask them, Dominic, what do you think?
Yeah. Hi, Simon. Yes, not so easy to predict, I would say, for 2022, because we don't know what will happen, with the supply chain. That's a real question, what the supply chain shortages could impact or will impact or not, our revenue this year. On our side, we really believe that we can, we forecast plus 5%, for 2022, but with some risk,
okay.
And the main one will be the main risk, will be the supply chain shortages, in the distribution, mainly coming from China. And that's a real question mark. If it does not impact so much, we still believe that we can do, or we can see a plus more than 5%, in the distribution market in 2022.
Okay, thanks very much, Dominic. That's really great. How about you, Frank? What do you think from CMS perspective?
Thank you. Yeah, so we're probably have a narrower focus because we don't do a lot of the product categories you talk about today in terms of laptops, printing, smartphone, TV. So we have a much narrower focus. However, what we're seeing is, so we had high expectations going into Q1. I think we had forecasted Q1 around 10%, and we fell way short of that, although thankfully we were in positive territory. What we're seeing is a lot of our brands on the hardware side where there is price increases, the fall in the unit price is negating that price increase. So the outcome is, plus 1-2% revenue growth. So the units are falling, but the price increases where we thought we were getting our growth from hasn't lived up in Q1. However, I have to caution that with Q1 last year, we had an extremely strong Q1 last year at over 20% growth in Q1. And then it tailed off into Q2. But we are coming off Q1 with a very strong pipeline for Q2. So I think Q2 for us will set the tone for the rest of the year, with the exception in the consumer side of business, which is the big question is how are consumers going to behave in Q4 based on energy price increases, potential recession, et cetera, et cetera.
Yeah, I think that's a bit of an elephant at the moment, isn't it? Q4.
Yeah. But I do think Q2 will kind of set the tone for Q3, because last year, with a very strong Q1, Q2 softened and Q3 softened. But our pipeline for Q2 is quite strong. So I'm hoping we're going to see more consistency in Q2 this year rather than the high expectations we had for Q1.
And overall, Frank, are you a greater than 5% person?
Well, I am always looking at the glass half full. So last year we delivered, I think it was for the year 7%. So I'm sticking to a similar figure for 2022.
Okay, great. Okay. So Wayne, how about you? How do you see 2022?
Well, with my rose-tinted glasses as well, a bit like Frank, I was looking at greater than 5%, but actually, as you were going through all those other figures, of course, it struck me that I'm looking at this perhaps from my own point of view, and we're in the unified comms, cybersecurity and intelligent networking business. So we have a much narrower focus, like Frank described. So all of our technologies, God willing, are in the growth area. So I would say it's limited to what we see and where we're going. And I think to Dominic's point as well, a lot of our business is software. Hardware continues to be difficult to come by, and there has to be a lot of work to get that to where it should be. So I think reflecting what Dominic said as well is supply chains could continue to hurt and could get worse. So yeah, I would really caveat, I'm really coming at this from a niche set of the market, and also a lot of things could still happen that are nasty. But overall, glass is definitely half full.
Great. Okay. Well, I'm fascinated that this group of people, not exactly the same people, is actually a bit more optimistic than when we looked at this last time, which is interesting, because just remind me that we had more people in the 3 to 4% last time. So is there anyone who would say that you're feeling a bit more optimistic as at the end of the Q1 than you were back in January?
I would say similar.
Similar. Okay.
Yeah, similar.
Okay.
Yeah, I'd agree with that.
Okay.
I think also I'd say we're going from perhaps pessimism when the pandemic first kicked in, and we've been nothing but surprised that the sky hasn't fallen in. So I get that also you're getting used to that actually the world is perhaps more optimistic than what we see on the news.
Yeah, okay, good. All right. Well, I have to say we were a little bit more bearish than that, but we're going to definitely take into account what you're saying when we roll up our forecast, which we will be presenting actually next week. But it's really interesting to hear what you have to say. So let's just move on now to a question asking you what factors for the B2B side of business, what are the most likely factors to impact B2B sales negatively? Now, I am a glass half full person as well. And the last time that I asked this question, I asked you the positive factors driving B2B sales. So we talked about things like digital transformation and things like that, which are driving it. So this time, it's more looking at what could be on the negative side. So it'd be quite interesting because there are some big things out there happening at the moment which could impact things. And so it'd just be interesting to know which ones you would highlight. I can see supply chain shortages is definitely a big one. Okay, see, am I right in thinking, I can't quite see down the bottom there, but Teo, are we seeing 0% on lack of confidence to invest? Is that right? No one is voting for that. Okay, it looks pretty much as though it's 0% down there. Okay, then, well, we've got...
It will have an impact likely, but you were asking for the biggest impact.
Yes.
That excludes other...
Okay, Richard, thank you very much. You're absolutely right. You can do things whereby you vote for multiple choices, and we decided to force people into one. But I would be interested to know what people think. So basically, can I ask our three people to comment on that? Is there anything that surprises you in the vote? Or is that what, I mean, given what you said already, that probably reflects very much what you were saying in your first interventions. Dominique?
Yeah, for me, no, it's not a surprise at all. You know, I voted also for supply chain shortages because that's the feedback we are receiving, you know, is, I will not say, you know, is alarming, but probably worrying. You know, we don't know exactly, you know, how efficient will be the supply chain, you know, in the coming months, and probably you will face some shortages, and the big problem, you know, is the lack of visibility. You know, it's very difficult asking to main vendors about what they think about it, what will happen. You know, it's really difficult to get some visibility. Yeah. Meaning that we can be a little bit worried about that. And regarding the point lack of confidence to invest, I believe that if your question would have been, you know, about B2C, probably the lack of confidence to invest percentage would have been higher, but for B2B, not such a surprise to have a low percentage here.
Okay, very good. Frank or Wayne, anything you would add to that?
My only comment would be is obviously with purely B2B sales, for us probably 50% is software, so there's no impact on supply chain for us there, bar the odd appliance. And within hardware, our networking business isn't huge. However, it's predominantly on networking where we're having the supply issues based on chips. So we would see supply chain as a much lower risk to our business, and we would see cost increases being, you know, the main driver in the sense of the factors that will impact B2B sales.
Right. Okay. Wayne?
I would just add, so I think some of those look rather related. So logistics delays, lockdowns in Asia, I think they're generally supply chain. I would say actually keeping the right people, there's a lot of competition for people. And I'm sure everybody else is finding the same thing. Filling positions is really difficult. We're finding a lot of time you interview somebody, you think that's it, and before the second interview, they've already got a job. And we've seen that a lot. And I would comment on that lack of confidence to invest. That's a bit of a strange one, isn't it? In terms of, well, if the economy tanks, it's going to make a big impact. And if you think about the economy, there are so many black swans swirling. Until they land, or one of them lands, the economy continues, right? So I guess if we're seeing sliding stock markets potentially, if that really slides, then I think that lack of confidence to invest will shoot right up. But until that happens, I guess we can't see it, and we continue to drink from our half full glass.
Yeah, I had a quick look at some of the distributor stock prices, and there's been a bit of a correction in the last few months, but it's still way above where they were, pre-pandemic. So it's interesting to see that. But yeah, you're right, there is a big correction going on in the stock market at the moment. Okay, then, well, listen, that's really interesting. So let's move on now to the next question. So the last question, which we've got here. So in terms of, this is the consumer sales. Okay, so just to give you an idea, there's a 3 billion uplift that takes place every fourth quarter compared to the normal quarters. In other words, from Q3 to Q4, there's an extra 3 billion that goes through the retail and the consumer channels. And this is Black Friday, and it is back to school, and it's Christmas and Cyber Monday, and all those things like that. We know that people's purses is really going to be impacted by the increase in, gas price. My gas bill's doubling by October, and I think everyone's the same thing. Interest rates going up, and people deciding to spend their money on meals and entertainment and travel instead of IT. So I guess what we're interested in is just how much of an elephant in the room is it? And, that 3 billion, how much of that 3 billion in Q4 is at risk, which is, the big time. There's always a big increase, by the way, in Q4 for the B2B side as well. But the B2C side is like, it's a 45% uplift, whereas the B2B side is like a 30% uplift in Q4. So it's that real delta. So I think we're sort of leveling it around about a 0 to -5% on consumer sales through distribution. There is another factor, of course, which my Italian colleague was telling me about IT sales through distribution, which is that retailers are overstocked at the moment in some categories. Therefore, they may be coming to distribution more. This was my Italian colleague speaking, in order to manage the risk better of inventory. So it could actually be a bit of a positive for distribution between now and the year end if the retailers are a bit nervous about having too much stock. So there we are. Any comments from you, Dominique, and Wayne? Or I know that for some of you, Wayne particularly, you're not in the consumer business at all, so you wouldn't comment on that, but maybe Dominique and Frank could.
Yes, we are in the consumer business, but our main target, is commercial. We also believe that we'll see a decline, in consumer, probably around -5%. It started already, in Q1, so we don't see any good reason for an improvement in Q2, Q3, Q4. And different reason for that, as you explain, lack of confidence, in the future, prices increases, and different reasons, to invest in other things than IT. So all that, makes that we don't see any good reason, for an improvement in Q2, Q3, Q4, and probably the decline we already saw in Q1, will continue during the rest of the year, -5. Yeah.
Thank you very much, Frank.
Yeah, I'd be a little bit more optimistic. Q4 stock levels coming out of Q4 in the channel were higher than we had expected. However, there's been very good, solid sell-through in Q1, and which has resulted in us delivering good growth in Q1. So, and also I think a lot depends on the roadmap of new products. So I know some of our vendors are bringing their product launches forward this year, so they can get a better run up to Q4. So I would be optimistic that consumer sales would stay fairly strong. So I'd be in the category of overall 0 to 5% growth for the year. And I guess, as I said earlier on, the big question is what's going to happen in Q4 in terms of consumer confidence. And but I do think consumers need to be kind of hit in the head before they react to the reality of how much is in their bank account. So I'd be confident this year and less confident for 2023. Oh,
okay, that's interesting. What do you think is driving that continued purchasing?
I think people still have a lot of money. I traveled through 2 airports this week, and I've never seen both airports so busy in my life. People with suits on, predominantly people going on holidays. So I still think people have more money than they've ever had, and they're enjoying it.
Right. Okay, well, that's good.
Adam, very quickly, a couple of questions popped up on chat. I don't know if we have time, if you want to take a peek at those or not.
Yeah, sorry, I'll have a look at it. Beg your pardon.
Yeah, no, the one was on all-in-one PC displays and one on cameras. Just I think folks interested in seeing if you had any data information around that.
I'm really sorry I didn't get down to the cameras. I mean, they've done really, really well, and they're continuing to do really, really well. It's just that the negative look is because of the huge performance in 2020 and 2021. But we certainly see continued performance between the sort of very high 2020 performance and the 2021 performance, somewhere in between. That's what we would predict, I think. But there's still quite a bit of demand out there that we see, and certainly our data shows that. I probably can't get down to the level of the AIO PCs display, but I will come back to you, Johan, okay? I'll come back to you on that question, because that would be more a thing for Mary Christine, our analyst, to give you a response on. Okay, then, so let's move on to just a few thoughts from us. This is work in progress, but some thoughts for us following Q1 actuals. So we definitely see the backlog still there. We see an easing pressure on microchips, but still a problem. And there is some help which is coming from the redirection of the Russian product. We've heard that from various people. So that's an interesting factor on the supply chain. We're remaining positive about networking, and it grew very well in Q1, and we think it's going to continue to grow well in the rest of the year. We're kind of a bit more bearish about servers and storage, which we're looking at sort of flat growth, maybe a little bit on the positive side at the moment. That's for those categories there. We see hybrid office and home working is still a big driver, particularly in monitors, notebooks, accessories. Some of the advances in monitors have been huge, and they make a very exciting category. And notebooks and accessories, there are so many companies still which have investments to make in order to meet the hybrid office and home working needs. So the consumer, I think we've kind of done that one now, but we see it as much more muted and impacted. And, you know, we're getting these very bearish statistics coming out, for example, in the UK, the lowest consumer confidence for 50 years. And so how that translates into spending on IT is, you know, that's what we're not sure about. That's why we're interested to know the way that you see things going. We see the growth continuing towards software and cloud distribution continuing at its 25% levels. And lastly, we mustn't forget this huge public sector stimulus, which is going to happen in 2022, which has started in Italy and Spain, and we think that's going to really help the full year. So coming out of you know, recent forecasting sessions, My sense actually was that people were pretty confident on the B2B side, and which you're reflecting as well, all of you today, with a bit of an unknown question about the impact on consumer. So just to end off, this is a word cloud. You did it last time, and we just asked the question, what factor do you think will most impact the results of the IT channel in 2022? When I remind you about what you said back in January, you may be surprised actually, but it was a very, very interesting moment when you gave your feedback in January. And I'd be interested to see what word you choose now. So the way this works is that if somebody reuses the same expression, it becomes bigger. So that means that one or two people have chosen the war, supply chain, economy. Fascinating to watch this evolve. So I give it up until, assuming about the same number of people respond, I give it up to the 22 mark. So we're seeing war as the predominant one, followed by inflation, the economy, price increases, the zero COVID strategy, recession. Okay, but it's always interesting to see the one that is the most selected. So let me just remind you what you chose last time. I remember thinking I was really struck when you chose inflation last time. And it really made me realize that how much of a factor it is. I mean, we're talking about 9% inflation in Poland, 50% in Argentina, 6% in the UK, inflation that never been seen like it in Germany. So that's what you said back then. And it really sort of highlighted for me the importance of that, obviously with a sense of growing cost, but also, the way that it undermines confidence for people, inflation. But now, not surprisingly, I think that the situation in Ukraine leaves us all not knowing exactly what's going to happen in 2022. So thank you very much, all of you, for that. Perhaps we can stop the share now. I hand back to Peter.
Well, thank you very much for a really good presentation, good input, feedback. I also like to thank the three commenters, Wayne, Dominique, and Frank. I think it's always very valuable to have some discussion going. So well, once again, thanks for your contribution this time. Well, as Kavita said, we will see some of you hopefully in Amsterdam in a few weeks or a month from now, month and a half. Our next call, it will probably be after the Amsterdam meeting. I think we'll do another one just before the summer, because I think there's enough going on which we would like to inform you about. No, I'd like to thank you a lot and hopefully see you soon in Amsterdam or on the next call. Thank you. Bye.